Welcome to Investors Insights, where today's topic is consumer strength versus inflation. One market headwind that we've been following for a few months now, if you've been watching, is starting to get worse. And that problem is inflation tied to higher demand and lower supply due to the pandemic. And look, our concern is that in the past few weeks, we've seen numerous ports in China be shut down due to China's zero policy with COVID. So, in fact, we've already seen reports from shipping executives saying that around 50 container ships remain backed up around the busiest port in the world, which is in southern China. So as you can see in this chart, the volume of transportation in China's coastal ports has significantly declined in the past couple of weeks, which will likely prolong shortages and keep inflation high into 2022. And it's also important to note that the holiday season is around the corner. And it is also a concern that the Fed addressed last week, saying that higher inflation will lead to continued heightened uncertainty for the U.S. economy. So continue to be a concern for us and cause volatility in the market. And look, the shortages are well known. If you see it over the weekend, the auto industry with the lack of chips. So something we're watching carefully. But Adam, like I mentioned, volatility kind of spiked last week. Give us an update on technicals.
Yeah, thanks, Bobby. And to your point, we saw a lot of volatility in the markets last week. On Friday, we saw the markets give back a little bit. So our Friday close came in at 4,441 on the S&P 500. That gives us a new resistance level of 4,470 with a new support level of 4,410. Even with the volatility we saw last week, we finally saw a breakthrough on the 200-day moving average of 4,015. We always talk about it. Our base is slightly moving up as we're going forward, and hopefully we'll see some more activity that kind of suggests the same.
Yeah, thanks for that update, Adam. And also, Adam, going back to inflation for a second and why it matters and why it's affecting the markets. Talk about inflation and how it had a negative effect on retail sales last week.
Yeah, so July, we saw a drop of 1.1%. The expectations were more around 0.3 to 0.4. So that did give a little bit of volatility to the overall markets as a whole. Online sales kind of led the charge along with clothing. That dropped 3.1%. But there is a silver lining in it as well. We saw gas sales go up 2.4%, which points to the consumer kind of getting back out into the world in this COVID environment. And eating and drinking establishments was kind of the big number that we saw year over year change of going up 38.4%. So while there was some negativity with the overall retail sales, we did see some positivity year over year.
Thanks, Adam. And thank you for watching the vlog this week. There's a lot to cover. We will continue to keep you engaged, keep you educated. Have a great week. Thanks.